This is for educational purposes. There's nothing being solicited. I am a investment advisory representative with Financial Network Investment Corporation, and securities and investment advisory services are offered through Financial Network Investment Corporation. One other strategy for managing risks is sort of the bucket system. We've talked about this before. This is a traditional way of managing risks, but it's to simply partition assets and to say, even if I'm 70 years old, if I'm in good health, I'm probably living until 92. I got more than a 50% chance of doing that. So I've got some long-term needs, even if I'm 70, right? So I might take some of my assets and put them in things like a stock portfolio that are designed to deal with those needs that are 10 years plus, even if I am older, right? And then the things that I need in the next 2 to 5 years, I might use bonds and alternatives, and then I also have a separate bucket for cash that's for my next 1 or 2 or maybe even 3 years. But you can literally take, if you can envision the pie chart with the green piece being international stocks and the gray piece being large cap stocks and the blue piece being small caps, that's what's represented in the stock bucket, your bonds and your alternatives. And then as market cycles come and go, when the market's down, you don't take anything out of the stock bucket. You're taking money out of the cash bucket if you need withdrawals. If the market's down for 2 years, then you're using the dividends that are accruing in the bonds to replenish the cash, and then you start drawing down on the bonds. So you could leave money in stocks or equities or alternatives like commodities, and you can use the bucket system, and we do that as well.
The S&P 500 index is a widely recognized measure of the U.S. stock market performance. It is an unmanaged index of 500 common stocks chosen for market size, liquidity, and industry group representation, among other factors. The Barclays Capital U.S. Aggregate Bond Index is an unmanaged index that covers the U.S. dollar-denominated investment-grade fixed-rate taxable bond market of the SEC-registered securities. The index includes bonds from the Treasury, government-related, corporate, mortgage-backed securities, asset-backed securities, and collateralized mortgage-backed securities sectors. Barclays Capital U.S. Intermediate Government and Credit Bond Index is an unmanaged index that includes U.S. Treasuries, government-related issues, and investment-grade U.S. corporate securities with remaining maturities of 1 to 10 years. Barclays Capital U.S. Long Government Credit Bond Index is the long component of the Barclays U.S. Government and Credit Bond Index and is a widely recognized index which features a blend of U.S. Treasury, government-sponsored, U.S. agency, and supranational mortgage and corporate securities limited to a maturity of more than 10 years. The Barclays Capital U.S. Corporate High Yield Bond Index is an unmanaged index that covers U.S. dollar-denominated, non-investment grade fixed-rate taxable corporate bond market securities. Citigroup 1-month Treasury Bill Index measures monthly return equivalents of yield averages that are not marked to market. This index consists of the last 1-month issues. Returns for this index are calculated on a monthly basis only. The Consumer Price Index is an inflationary indicator that measures the change in the cost of a fixed basket of goods and services, including housing, food, electricity, and transportation. The Sharpe ratio is a measure of historical adjusted performance calculated by dividing the fund's excess returns by the standard deviation of those returns. The higher the ratio, the better the fund's return per unit of risk. Investors cannot invest directly into indexes. The performance of any index is not indicative of the performance of any investment and does not take into account the effects of inflation and/or fees and expenses associated with investing.